having us, Harit. It's great to be back with you again.
Thank you, Julia.
So for those of you who do not know, Goldman Sachs has a relatively new consumer business. Harit, you were instrumental in starting Marcus by Goldman Sachs. This is going to be the third year of Marcus. Explain to the audience why you all made this decision and what you are doing with Marcus.
Sure. So let me first say, what is Marcus and then why we got into it. So as you said, and Marcus is Goldman Sachs' global consumer business. So that in itself is surprising that Goldman Sachs has a consumer business. We inside Marcus call ourselves a 150-year-old startup. Our purpose is to disrupt consumer financial services in a way that we can serve customers better, and that's the core customer centricity, at the core of everything we do, and in the process build a business which is attractive for our shareholders. So what is it really that we are trying to do? We are building a digital storefront where we want to engage with tens of millions of customers, providing them free financial management apps. And we want to offer products that always are on the side of the consumer. So we have a range of products today. We have personal loans in the US. We have savings and CDs in the US. We have savings in UK. We've got personal financial management app called Clarity Money. I would urge you all to download Clarity Money and try it yourself. Don't take my word for it. And as you know, we've recently announced a co-brand with Apple.
All right, well, you mentioned that it's a 150-year-old startup. I'm so curious, what was that process like starting Marcus within Goldman Sachs, the conversations? What were some of the positives and then some of the challenges that you faced along the way?
Sure. So I guess the first thing is why we got into it, and at the core of it, it is a growth story. It is a growth initiative. You know, if you look, for example, in the US, the revenue pool, if you serve large corporations and institutions, it's roughly around $400 billion a year. But if you look at the revenue pool of if you're serving small, individuals and small businesses, it's roughly around $1.4 trillion a year. Let's say I've got it wrong by $100, $200 billion. It's still a large number.
Right.
Okay. And so it is that large, attractive revenue pool. Number two is, over an infamous weekend in '08, we became a bank. So, and our CEO felt we are doing all the regulatory compliance, administrative work of being a bank, but not doing traditional banking business. And the third is the world is changing. And while the world is changing across industries, perhaps we felt a little less so in financial services. And no disrespect to anybody in the audience, our view is that the large banks don't have an incentive to disrupt. And in a regulated industry, fintechs have limitations. So we are the only large bank which didn't have a legacy consumer business. And on the other hand, we have a balance sheet, we have a DNA of risk management and compliance. And I'm not saying that just because this is the conference, but I do think for sustained innovation, compliance matters. And we've got a brand. So it is that which made us want to get into it, that there's a lot of money, there are consumer pain points, and we have some advantages.
I'm just curious, why do you think there wasn't the incentive to disrupt within the banking industry broadly?
Because traditionally large incumbents don't like to disrupt themselves. And you know, the statistics are, some of these statistics, and we could spend a whole day on this, 60% of the consumers in the US don't trust their bank or credit card company. 70% of the millennials would rather go to their dentist than their bank branch. Now that's a low bar. I don't know about you. I don't like going to my dentist. Okay? And it's sad that for half the country, they don't have enough savings so that if there is a $400 unanticipated expenditure, they need to either borrow or sell something they own. So, you know, the world is changing. So I take an example. The real innovation is in the distribution and consumption experience. So for example, the diaper a mom buys at Duane Reade or the diaper you buy on Amazon is the same diaper. Or when iTunes started, the Bob Dylan song you bought on iTunes or the Bob Dylan song you bought on the large LP is the same song.
Right.
But it is the distribution and consumption experience. Amazon or Apple have used engineering and data and design to make the experience simple and transparent and repeatable. And I don't have to walk to Duane Reade to buy the diapers. I can order it at 9 p.m. from my family room. There's no reason why I shouldn't be able to do that with my personal account, my savings account, my personal loan, my mortgage, my credit card over time. So I think the large banks with 5,000 branches are probably a little late in embracing that.
Right. Well, you mentioned earlier the massive revenue pool, the opportunity there. Give us an update, though. It's going to be the third year of where the business is today in terms of your customers, what you're seeing.
Sure. So we don't have a single branch, and we have 4 million customers, and we are just about starting our third year of being in business. We have around $46 billion in our savings business between US and UK. We have $5 billion in our lending business, and it's deliberate, the mismatch, because in savings we are full throttle. In lending we want to be measured. We purchase Clarity Money, which is personal financial management apps, tools which help you be in control of your spending, your budgeting, etc. And as I said, we've announced a co-brand partnership, and we have publicly said that by next year, we would like to have crossed $1 billion in revenue. And again, the firm has publicly said that we are tracking well to that.
You're tracking toward that. You mentioned a couple of your priorities. Can you elaborate more on the priorities, what you're most focused on right now?
Sure. I think the core of our priority always is customer experience. And I'm not saying that in a rhetorical, flippant way. Every single day, we try and see how do we improve customer experience. And we recently won the J.D. Power #1 in J.D. Power in our personal loan business, which is a very rigorous standard. Now, and if I may stick to the customer experience for a moment, given the theme of this conference, the best way to get compliance, the best way to get regulatory sturdiness is to focus on customer experience. Because customer experience is all about making sure that you make promises that are simple and transparent and easily understood, and then having processes to make sure that you deliver against those promises. And then the third part is you should be able to prove the above two. Only the third part is a regulatory audit compliance requirement. But the first two are good business. So if you do good business, you do good compliance. As the speaker earlier was saying, compliance and business is symbiotic. But our priorities are that I would say we want to continue to scale the businesses we are in and continue to expand in the businesses we are not in. Partnerships is a very important part of our priorities because I think we are really fortunate that Goldman Sachs has some of the best investment banking relationships. And we have, through our business, we have ACO, which distributes benefits to the Fortune 500 companies. We have very good relationships. So not only are we building our product capabilities, but we are, and direct to consumer, but we also want to distribute our products at places where consumers work and places where consumers shop.
Right.
And so that is a big priority for us.
So you mentioned earlier just some of the growth. It sounds like customer experience is driving that. What else do you think is driving the growth?
I think it is, first of all, we will do only as well as our customers do and the consumers do. The economy is doing well. People are feeling good. But, take our savings account business. We launched it in London last year. And as we publicly said, we launched in around September last year. And our internal projection was that we will do around $1 billion of growth in the first 4 months. We did $5 billion instead of one, okay? And our call center didn't collapse. And the reason I give that as an example of what is driving growth, it was very simple. We gave an attractive interest rate because we don't have the burden of branch infrastructure. It came from a trusted brand, and it was a simple, easy process. You don't need complex products. You need simple products. And you need them to be offered in an easy manner. And it so happens if your product is simple, it's good from a compliance perspective. So what we have learned in our loans business in the US, in our savings business in the US, in our Clarity Money business, in our savings business in UK, if you give customers good value, so our interest rate on a savings account in America today is 2.25%. The interest rate on a savings account on most brick and mortar branches is around 0.1%. So we are delivering value. The next stage is, can you open it in a simple way, in a transparent way? So we've got to do a lot of engineering work to be able to make the process easy for the consumer and yet have all the KYC, AML, credit checks, fraud checks happening instantly. And then we've got to make sure it's from a trusted brand. And if you do, it's very simple. Conceptually, it is very simple. Now, it is very difficult to offer things simply. Simplicity is what banks today do, they make things simple for themselves and they make it difficult for customers. Because it's very simple to build in your own silo. I'm in the compliance function, this is what I'm doing. Who cares about the other function? I'm in this product area, I'm doing it like this, who cares about the other? It's not that you don't care, it's very difficult to navigate. So our core of our strategy is an integrated digital platform of which all this mushrooms. And so what banks traditionally do, and I've been in banks all my life, they make it very simple for themselves, and the consumer has to navigate the complexity. What we are trying to do is make it simple for the consumer, but it is complex for us internally on the execution side.
Right.
So that's really what we think we are trying to do.
Well, then what would you say would be the most challenging part that you're facing? Is it bringing on new customers? Is it, creating awareness for new products? And how do you go about doing those things?
Sure. So you're right, we have lots of challenges. We are doing very well, but there are lots of challenges. First of all, we don't have a large customer base. We have 4 million customers, but we would like to have 30, 50 million customers over time. So customer acquisition is tough. A second challenge is that since we started new, while we have a very sophisticated technology and data architecture, where everything comes in together, we have limited on-us data. The third challenge is that we are building this organically, and organic builds are hard. So there are lots of challenges. And the fourth, perhaps the most important, is, and I say this humbly, we are Goldman Sachs. We are heavily scrutinized by regulators, by the press, by multiple stakeholders, and heavily scrutinized internally and externally. So our challenge is we don't have some of the freedom which a startup may have to do a beta test in the market. Our level of execution, our level of marketing has to be a higher standard, which for a startup is tough. So, but that's the flip side of a good brand, and we would rather embrace that. So we are building a modern, agile business inside a heavily regulated bank holding company. That has advantages, but also has challenges. In fact, as I say, we have a crisis every week. And after the first 3 crises, I've realized that crises you must embrace them, and it's a great project management tool. Because if you are having new crises every week, it means you're making progress. Now, if you have the same one every week, that's a little bit problem, okay? So it's a sign of progress. But what we are really doing in terms of addressing these challenges is it's a very classic Goldman Sachs response. Great people and great culture can do things well. So we've really been fortunate that I think we have the most diverse and talented team. A third of our people are from the traditional consumer banks, Citi, Chase, Amex, Discover, Cap One, etc. A third are from within Goldman Sachs. These are bankers, traders, private equity people who said, we'd like to do a startup. And a third are from non-traditional places, all the way from, on the one hand, Google, Facebook, Amazon, to consumer brands like Michael Kors, L'Oreal, Gatorade, to entertainment brands like Netflix and Hulu and HBO. So I think getting this combination of people, and I think the secret sauce we've had is, when you ask somebody in our team, they don't say, I'm in compliance, or I'm in legal, or I'm in marketing, or I'm in credit. They say, I'm working on the onboarding squad. I'm working on the customer management squad. Yeah, so our whole work unit is functionally, multifunctional, integrated squad working teams.
Well, here, actually, I heard that you didn't necessarily want to jump over to Goldman, that they had to kind of convince you. And I'm curious what that process was like for you, and then how do you convince those folks to come over to Goldman? You were just citing a bunch of companies that are probably competing for the same pools of talent.
Yes, talent is a big issue. So that's true. The story is that, Goldman Sachs decided, did a very thorough, deliberate thing about wanting to get into the business. Then they said that they don't have consumer talent inside the firm. They reached out to a whole lot of people, names which are well known in the industry. I joked that I was probably bottom of the list because I was refusing to return calls and refusing to meet. And I was not doing it as some strategic negotiation. I was genuinely uninterested because A, I was very happy where I was, and B, I was skeptical whether the firm would really be committed to a consumer business. And the third, I wasn't sure whether I would like the culture. And they tracked me down at a dinner in Washington, D.C., convinced me to come and meet them, and within 8 weeks of the dinner, I had already joined. And I joined also because I fell in love with the culture, and of course I'm biased, but I think Goldman Sachs culture is really unique and really special. The outside-in characterization is sometimes not as charitable as I think it should be. It's really focused on clients and teamwork. And everybody is there to help each other. We are not perfect, but it's a very strong teamwork, client-oriented culture, so I thought that would be good. Two, this is arguably the world's #1 franchise in financial services, and what we are doing is not going to transform the franchise, but do a meaningful extension. And the third is, as I got involved in the interview process, I realized that I have been in large banks all my life, and while we are doing very well, most of the large banks are all the time competing with each other. And the competitive intensity is how are we one better than the other? In the process, perhaps we lose sight of the consumer. So competitive intensity versus each other rather than the true consumer pain points. And starting a business new with the pockets and brand of Goldman Sachs, I thought could be neat. And so finally, it was an opportunity to be disruptive, which I didn't have the courage to say no to. And that's exactly the same thesis we have used to attract the talent. That, if you want to do something different, maybe this is where you could. And that's the thesis we have with our partnerships. We want to partner with companies who share our passion for customer centricity and our passion for doing things differently and better. Of course, we need engineering, and of course, we need data and design and legal and compliance. Those are conduits and capabilities. But we must share a common philosophy. And so that's the philosophy we've used to attract talent and to try and form partnerships.
Right. Well, just to comment broadly on the fintech space, there are a lot of competitors out there. You have made some acquisitions. So I'm curious, how do you think about the competition, and how do you kind of assess your M&A strategy at Marcus?
So first on the competition, for different products, there are different layers of competition, and there are fintechs who are doing very well, there are banks who are doing very well. But to us, the most profound competition is consumer inertia. We pay 2.25% interest rate on an online savings account with $1 minimum balance and no fees. A traditional bank branch in New York City pays 0.1%. That bank has been there for 100 years in consumer banking, has maybe $300, $400 billion of deposits. We have around circa $50 billion of deposits. Why should anybody put money over there? We offer a personal loan to a credit-worthy customer who can pay down their high-interest credit card and earn 3 to 5% lower interest rate in an easy way. Why should you buy a washing machine on a credit card? So it is consumer inertia, which is our biggest competition. In terms of M&A, yes, we are obsessed about customer centricity and culture. We will do M&A where we think it makes sense to add on a capability, but we will do it if there is a commonality of philosophy and chemistry. And so we initially purchased the GE deposit platform, which was $9 billion. Now it is, more than $36 billion of deposits. We purchased Clarity Money last year. It was around 1 million customers. It's now more than 2 million customers. So we have done some acquisitions, but we have been very focused on an organic architecture build, both from engineering, perspective, and culture.
Harit Talwar, Global Head of Consumer at Goldman Sachs, thank you so much for your time, and thank you to everyone here.
Thank you, Julie.